Hey everybody, it's Larry Berman here. What a week. Go Team Canada. That was just an incredible final match with the Americans. I have to say, being a diehard lifelong Leaf fan, I just felt like they were going to roll over and die in that second period. But great to see the tenacity and the comeback. One of my favorite players, Toronto Maple Leaf, Mitch Marner, couple big assists. I think he's one of the best two-way players to ever play the game. I'm just putting that out there, Toronto fans. He gets crucified in the media here. I hope they give him a massive contract. The guy performs in and out, and I get that we need him to win us a Stanley Cup here. So we'll see how all that goes. Anyways, lot to unpack this week on markets. Let's dive into the chart room. Okay, on the economic front, weekly claims again, very, very benign in the U.S. And as much as there's spots of weakness in the labor market, a lot of eyes on Washington and Doge now and looking for claims coming out of D.C. with Doge laying off a lot of civil servants. The needle hasn't moved much yet. And so we'll see how that all plays out. It could be a lot more talk, pomp, and bluster than it is really meaningfully moving the needle. Apparently their website was saying it was 80 billion in savings, and it's not 80 billion, it's more like 8 billion. Anyways, so even Doge makes some typographical errors. Anyways, when we got Friday's data out, big surprises. So PMI, that's been leading the service sector, that's been leading the expansion in the US, went into contraction mode. It's 1 month. It's not necessarily a trend, but it's and so, when this piece of data came out, markets started to feel some pressure. But at 10 o'clock, when the UMich sentiment came out and we saw more of an uptick in long-term inflation expectations and not a rebound back down from the jump we saw in the previous reading, you've got people concerned. And so that translates into more cautious consumer. So that's there, but the jobs market is still solid. Was the reversal Friday in markets and the failure to break out, because we have talked about this now for a couple of weeks, where the market's up against the old highs? Will it, won't it? It just felt 2 days ago, Wednesday, like it was going to break to the upside and nobody wanted to sell anything. And then you get a questionable data print, and then maybe. This was an issue on Friday, a little bit for markets, where we had some news out of the Wuhan Institute in virology in China. We know that famous place for the origin of COVID-19, and what I'm sure President Trump will start calling another China virus in a minute or two. So we saw Moderna and some of the biotechs pop a little bit, but let's keep that in perspective here. Moderna's been a bit of a shit show for months now. To me, it's now interesting. I hated it up here, and I'm nibbling at the name now, and arguably I started buying it against 60 support. I'm nibbling, I'm adding. Let's see. But I'm in a good position here. Didn't add to it on Friday with these headlines, but if we start to see this thing move, it might be worth a trade for some of the bottom pickers looking for some speculation on that name. On the bond market, so what didn't make sense Friday? So we get all this stuff out of the Fed minutes, and we heard from Scott Bessent this week, and he clarified his vision on focusing on the 10-year. And while maybe long bonds saw some flight to safety because of the weakness in equities, again, this thing ain't going anywhere anytime soon. So I think we're going to just chop around in a range here, and probably no different than the stock market. So here's our NASDAQ, here's our Qs. S&P, same picture here. Failed to break out again Wednesday, was looking, closed on the uptick a couple of times. We saw a little bit of weakness throughout the week, and then, towards the end of the day, a little bit of a bid, and then finally options expiry Friday. So what happened there? So we had heard, I haven't vetted this, but we had heard the rebalancing of QYLD. So what is QYLD? I get asked a lot about this on BNN too. So this is for the yield seekers that want exposure to tech. And so it owns all the underlying names of the NASDAQ 100, and then it writes calls on the index every month. And so every option expiry month, it rolls the strike price to the next month. And so we had been told today that this rebalance was going to cause the equivalent of $7 billion worth of selling in the NASDAQ index. And so that seemed to be the lead pressure. You also saw in terms of a couple of earnings misses this week, a little bit pressure, broader. So that had into some of the S&P 500 names. But here's the thing with these ETFs, and people get fooled by these dramatically. They offer these bigger yields. People get excited. I want the income in my portfolio. Look at the 5-year comparison between the Qs and QYLD. Like, who wants that, right? So that's a big issue. Now, when the markets are bad, like 2022, it went down less, but it didn't really protect your portfolio. It just gave you more income. So net over 5 years, you've lost 22% of your capital, and you've got 44% of your income. So you're paying tax on the income, you're losing capital. Like, that's just a bad trade, folks. So on sectors like tech, I just don't love this product. Well, I hate this product, actually, as a way to get income into portfolios. Covered calls on individual names, like BMO does in the ZWT, much better if you're looking for yield coming off technology. So something to keep in mind there, folks, when you're looking at building portfolios and whatnot. So just a quick rewind on where we are here. Tape bomb risk of the weekend, volatility driven sell-off, key resistance points. Let's go back here and look at the chart of the Qs, and I'll bring up the S&P 500 just for a comparison. And again, kind of looked like earlier in the week we were breaking out to the upside, and big failure back to the 50-day moving average. I think we're going to revisit the bottom end here before we can give the top side another look. So a little bit more downside in the coming weeks. And again, the markets are pretty fully priced here. So little bits of bad news, weakening service sector, new China virus perhaps. Take a little bit off the table when the markets are very, very expensive. Have a great week, everyone.